What is tax pooling? Nice and easy. Tax pooling really simply allows you to pay tax when you want.
Yep.
Is that
Yep.
it?
So IRD says you've got to pay tax if you've got a 31 March balance date on 3 dates. August 28th.
Good.
January the 15th.
2.
And 7th of May.
Ooh,
Is that right, mate?
Yeah.
Hey. Look, you don't have to if you use tax pooling. You can actually pay the cash into the tax pool when you've got the money in the bank.
Yep.
And it suits you because your business might be seasonal, cash flow might be seasonal, and they will make sure that the tax ends up sitting in your tax account at IRD on the right due date, because they've got access to a massive big pool of cash from people that are paying much larger sums of money in cash that are overpayments that you can then come along and buy, essentially. So it's a little market for buying and selling tax.
Yeah, I guess key learning there is to understand that if you do get caught behind in terms of paying tax, that you need to speak to somebody that understands tax pooling.
Absolutely.
Because you can avoid late payment penalties, and there are solutions there, and you can even finance tax in this day and age, right? So there are solutions if you are behind in your tax, or you haven't paid any at all, or all of a sudden you're getting big demands from the IRD for chunks of tax which you feel like you can't pay. So,
and the absolute massive benefit of using tax pooling is you're not exposed to IRD penalties, which can be really, really costly, and the interest rate between the tax pooling intermediary and IRD is a pretty huge saving.
Bingo.